Welcome to TradeTheNBA.com. This is John. This reports for the 27th of July, and well, it's a big day. We have the expectation of the GDP numbers. Didn't realize that was like such a major event. All of a sudden it is, and it's expected to be a good number, but how good, blah, blah, blah. We don't care. Because you already had the pre-news pop of it, and more likely than not, unless it blows past expectations, you're probably going to see some selling into it to get back towards the EBM yellow line, which is continuing to rise. So still within this overall rising shakeout, cyan below. We did see this steel cross here, which is the opening of the snake mouth. And finally, the cyan is just starting to pop through it. So that would be perfect correspondence to a little bit of weakness fading into it. You're still having strong rising gold as well as azure. Usually those have to flatten out before you're going to get any kind of softness, or as we might call it, significant weakness. The NQ has been much weaker in general, and you can see just a little bit more soft in its arc. Certainly not seeing the expanded move of the shakeout. And, well, I guess you would see that was reflected in Facebook's performance, blah, 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 blah. But even despite that massive decline, it still didn't impact the index at all. For the most part, we're still at elevated highs, all of which everyone says is impossible, blah, blah, blah. We don't really care about that because we're just going to follow the reading. So this collapse of the Fibonacci highs here on the euro should try and pull the euro at least back to the 50%, but that decline is pretty rapid right now, and we're just stuck in this tight range, which is using the bottom line of our range as its support. We expected it to actually be inside of that range, and this elevated level has certainly helped the market break down below into it. Would certainly have an impact, and it's interesting because with the EU's negotiation, I think the euro should be even in more trouble than it is, but we'll see how that plays out. As far as TLT treasuries, well, we know that the pressure has been for the Fed to want to continue to hike rates, which is going to put pressure on the market as well, because at a certain point, you get enough yield, no reason to be in the market when you can have safety first. That's the way they think. And from an oil standpoint, still rising. So this elevated level is just going to become the new norm, it would seem, at this particular time. And it's going to result in numbers starting to add to inflationary elements. Until we see it, though, from a labor standpoint, it's still not going to produce what the Fed is looking to try and quell, which is growth. Go figure that. Interesting that the Fed role is to limit growth. Before they couldn't get any growth, and now they want to stop it because too much is a horrible thing. When in reality, it would probably be a good thing if they held off on the rate increases, but they're not interested in that. And it's sort of counterproductive because it just balloons the deficit numbers, which makes things even more difficult liquidity-wise from a borrowing standpoint for the government. Gold still can't catch a footnote. Finally, though, we do have our orange below, and if we retest towards the lows here, or even make a lower one, could actually be the healthiest move we've seen in a while. We're not getting any steel resets, so none of this is going to be sustainable. Nor do we have red even close to the negative 13.5. So I know there have been a lot of commodity bugs screaming like, oh, time to get in. Well, a little early, not necessarily horrible, it's just a little early. So we had some softness going in early on, and we ended up with a gold below the 50. It popped right above it, but came right back down to the 23%. It's kind of erratic shakeout move until we got back above 50. We produced a gold above the 76, didn't leave a whole lot of room to 100%, but did get to the 100%. And when it did that, it produced some beautiful positive extremes and little blue warning dots there. and that resulted in a move right back to the exact same spot, the 23%. So this is just kind of a range day for the most part, simply because everyone's waiting for these GDP expectation number, which usually is slightly bullish as the anticipation builds towards it. We ended up with gold near the zero and then actually produced new lows, so it did exactly as it should have. And then a little springboard pop here with the reset of the DOC. And sure enough, that's led to where things are currently. Still not overdone. We're not seeing any extremes from the shakeout. We just got the start of a DOC spread with the proverbial snake popping in there, but the shakeout has been rising through it. Also, just about to see the beginnings of a shakeout drop. So we'll see if that is able to bring it back into range here. This is very modest so far, so nothing significant is happening, but strong way to end the week. And of course, we're going to have rebalancing today for a lot of the funds are going to be wanting to window dress, take advantage of, because this will be the weekend, and we'll be right at the end of the month, coming the start of the week. So that could have a little bit more impact today as well as at the beginning of the week. As always, though, I will put up anything relevant. This was a tighter range. The GDP number comes out pretty early in the morning before market, so at least in futures we'll see some activity before that point. As always, though, trade well. We'll talk to you later.